Welcome to the Titans of Industry show. Today I've got a first-time guest who is a very interesting guy because what he does involves finding risks in the market and mitigating them, which is a topic we focus on at Wealth Research Group extensively, and it is now a much bigger concern than ever before. Joining me then is Mr. Kevin W. Massengill. He's the founder and CEO of Niobium Holdings, which has created a unique approach, a new approach to predictive analytics in capital markets that will improve performance and vindicate active investing. Prior to founding Niobium, Mr. Massengill served as a senior vice president for Leidos, which is a $5 billion science and technology company. Kevin, how are you today?
Brilliant. Thank you very much for having me.
I took a close, hard look at an infographic that you and your team, including Jim Rickards, have put together on visualcapitalist.com under the title Market Complexity Will Trigger Next Crash. And you equate this to a mountain full of snow. What is that analogy exactly?
Yeah, no, that's a great question. So the reason we use that particular analogy is we're trying to convey an idea that is somewhat lost on modern governments and central banks and maybe even the financial industry as a whole. And the answer is basically this. You can't understand something, no matter how elegant your math models, no matter how intelligent you are, or how well-intended you are, if you don't understand the basic nature of what you're dealing with. Right? So if you think you're dealing with a machine, a thermostat, you're going to dial up a little inflation, you're going to dial down some deflation, it gives you the illusion of control, right? You think that you can measure the inputs and calculate the outputs, and there's a couple problems with it. The first problem is that it's just not so. The economies aren't a machine. They're not simple. They are complex adaptive systems. Let me give you an example. If somebody got in front of you and I and started talking, say we're at the National Press Club, and some guy comes in wearing short pants and a Smokey the Bear hat, and he starts talking about how, and he's a forest ranger with the Park Service, brilliant guy, PhDs, he and his friends study the problem. They get all the data, and they're gonna fix Yosemite. They're gonna make it better. They're gonna dial up the number of badgers. They're gonna dial back the number of bears. We would just look at each other and smile, right? We'd know instantly this guy has no idea what he's talking about. And he's fallen into the classic trap that Hayek called the fatal conceit, this idea that any individual or group of individuals could possibly have enough data to understand the outcome of what they're trying to take on, right? We would know that you start monkeying around with something as complicated as an ecosystem of a national park, all you're going to do is cause this host of unintended consequences, right? And you're just going to spend the rest of your life trying to fix what you already broke in the first place. That's because an ecosystem is a complex adaptive system. It falls under a certain set of laws that are different. Well, our argument is that likewise, financial capital markets are also complex adaptive systems, and they are no more easily manipulated, no matter how smart the math looks, no matter how well intended, no matter how fancy the degrees. The people who think they can just dial up a little inflation and dial down a little deflation are simply playing in that hubris that Hayek called fatal conceit. They're not God. And it doesn't matter how much data they think they have. It doesn't matter their fancy theories or their physics envy. What they're doing will cause a host of follow-on effects that they simply can't calculate because they're not God. And so we're using the analogy of an avalanche to try and capture this idea that complex adaptive systems have all of these inputs. They have all of these variables, and if your readers want to pull that up, they could Google it. I think the title was "How Market Complexity Could Trigger the Next Crash." But if they could, put any of those words together with our name, Niobium, or with Zero Hedge or Visual Capitalist, who initially published it, and it was picked up with a bunch of other places, they could see this. But the point is, and the reason we use the snowflake, the avalanche, People always want to know, okay, I get it. We understand the world's in precarious times. There's way too much debt in the system. There's got to be an unwinding. But when's it going to happen, right? People always want to know a time prediction. You can understand why. And our answer is typically, if you and I own a ski resort, we step outside on a bright, beautiful morning and we look up at the snowpack, and we can tell it is this massive, unstable overhang. It is really dangerous. You and I don't have to be able to calculate which particular snowflake is going to trigger the instability that leads to the avalanche, right? We just know that's an unstable mass. And if we don't take some proactive steps to mitigate that risk, either detonate cannons or dynamite or whatever it is people that are professionals in that space do to go ahead and bring that down, we know all of our skiers on the mountainside that morning are at risk. And it doesn't really matter which snowflake lands, right?
That's it's a very true analogy.
Exactly. So all we're trying to convince with the Mariglean project itself, what we're trying to do is bring a blend of science that is common as dirt in its respective fields. And I don't mean to be flip or disrespectful to the scientists involved. The scientists I've got on our team are some of the best in the world. My only point is we didn't invent water. We didn't invent gravity. All we've done is taken very well-established science from their respective fields where it's used and brought it to capital markets where, for whatever reason, we've got some theories, but won't bother go into it, why government, central banks, and the financial industry have just kind of let all that science pass them by. And so they're routinely surprised when their machinations fail. And all we're trying to do is convey for our clients that what appears to be magic from the outside, when you go to our website and you watch the film clip of our chief global strategist on Bloomberg, Jim Rickards, on Bloomberg or on various news channels, making declarative statements of fact months in advance that are completely 180 degrees out from consensus. We call Brexit in advance. We call the Trump election in advance. We call the March interest rate rise. Today, we're saying there's no way in hell interest rates are rising in December, but the market gives it a 90% probability. They're just wrong. And the reason we can do that is because we're looking at better data than they are. That's all. I mean, it's not like we're prognosticating or guessing or magic woo-woo and crystal balls. It's just simply the future's here now. It's just embedded in the data. It's another way to think of it is like a row of dominoes. If you're focused on the seventh domino and that's what you can see, you could tell a lot about it, but to you it looks like it could tip as easily one way or the other, etc., right? But if you're standing where I'm standing and you can see the entire row and you can see the finger that just tipped over the first domino, right? I can give you a pretty accurate guess of what's about to happen to the seventh domino. If you can't see the row, it might look magic to you, right? It's not magic. It's just good data.
Sure. You list 6 items as signs that paper markets are unstable. Can you talk about that?
Sure. So, and these are actually reflections of the kind of things that make up a complex market. So in that section just above it, you see what defines a complex system in the literature, right? So you got diversity, you got different actors with different points of view. You got that it's connected, so everybody's information is influencing each other. So you get this interaction, trillions of dollars of securities going back and forth. You get adaptive behavior, meaning actors are changing based on the signals they're getting. And so that's the nature of this system and why. And everything I just said should make it really obvious to your listeners that, yeah, that defines capital markets pretty accurately, right? It's not really a stretch. And then, so now take it forward. So here's what we see right now in this systemic that makes up systemic risk. We think there's this densely connected network of bank obligations and liabilities, the derivative exchange calculations people can't even make. Banks themselves can't calculate their own exposure. One of the reasons why everything locked up after Lehman and before that after long-term capital management, was because the banks didn't trust each other. If they knew they couldn't calculate their own exposure, they were really certain their counterparty couldn't calculate their risk. And they were just really worried about executing anything that would add to that exposure. And so that's why everything just kind of locks up and grinds to a halt. So it's that densely connected network right now. The next thing, you've got $70 trillion in debt that's just been added in the last 10, 12 years since the financial crisis hit. I think right now around the world, you're running something like a 325% debt to GDP. That's the global, if you took it all together. And I would tell you even that number is woefully inadequate. Ask yourself this. If you listened to a company describing their exposure, their debt obligations, and you heard them say anything other than their debt compared to their ability to discharge that debt, whether that was free cash flow or whatever, right? But if they got, that's what you'd expect to be hearing, right? But if they get up and start talking to you about their debt of their company relative to the overall general domestic product of the city of Houston, where they happen to be located, right? You're like, okay, well, that's nice, but why are you telling me that, right? What does your debt have to do with the overall economy of Houston, right? Square root of absolutely nothing. Well, it's the exact same thing governments are doing to us. When they start talking to us about debt to GDP, you ought to just roll your eyes. What in the world does your government's ability to pay your bills have to do with the economic productivity of the entire country, right? Talk to me about your ability to pay your bills as a feature or percentage of your tax revenue, of your ability to pay your bills, right? It's just fantastic. Anyway, so that's a situation we sit in. You've got this over $2 quadrillion now in notional value of derivatives, what Warren Buffett calls weapons of financial mass destruction, right?
Sure.
You have non-bank shadow finance through hedge funds, securitization. So again, it's not only impossible to regulate that risk, it's impossible to even get your hands around the numbers. There's nobody in the country that understands how to calculate that risk. And this is a really important point your listeners should take away from. One of the dangers as they hear guys like you and I talk, there's two human biases that immediately come to the fore, and then there's probably a good reason for them, maybe for survival reasons, but they'll get you killed in a situation like this. The first one is normalcy bias, right? It hasn't happened. These people, I've been hearing people in the background talk about how dangerous the situation is since we went off the gold standard. It's not blown up yet. Why would I worry about it now? That's the first bias you got to fight through. The second one is learned helplessness. Never hear people talk about this, but I think it's really important. There's a sense that people can fall back on that these topics are just too complex for me. I don't have the academic background. Who am I to judge? I can't tell sense from nonsense when these people are talking. So I just have to trust that these people know what they're doing and they'll sort it out. They'll figure it out, right? And here's what I'd tell your listeners. You cannot sit back in the back seat of the car like you're 7 on a dark, stormy night, scared, looking out the window, and then you look up and you see your dad's driving, and you think, okay, he knows what he's doing, he can get us home, and you just go to sleep, right? All kids remember some episode like that as children. The point to your listeners are, there are no adults behind the wheel. You cannot sit back in the backseat of the car and trust somebody's going to figure it out. They have no idea what they're doing. None. And so you have to fight that impulse to say, these are complex topics. I don't have the academic background. They start talking about, general equilibrium theory and efficient markets, and they sound like they know what they're talking about. Who am I to question that? And I would just tell you, that attitude will get you wiped out, because these people literally, they mean well. I don't mean to say that they're necessarily duplicitous or they're trying to crash the car. They just literally have no idea what they're doing. I mean, here's an example. under their economic models, under their economic theories, let's use Keynes, for example, they actually believe that you can jumpstart an economy by having everybody kite checks that are drawn on nothing, and everybody will think that's economic productivity, and therefore everybody will just get back in the markets, and the flow starts, the circular flow, and the economy takes off. And they call it animal spirits, right? That is alchemy, rank alchemy, and just pure nonsense. What drives an economy is the same thing that drives your home. This isn't a difficult concept. If you produce more than you consume, you have a surplus. That surplus you can spend into the economy. Societies that organize themselves to honor the iron law of economics and allow you to and protect you in your formation of that capital base thrive. The society thrives. Capital is formed. Capital expenditures can be made. Higher productivity develops. People's standard of livings go up, and you have economic prosperity. Societies that are organized to degrade that ability, to steal from their productive citizens, to not honor the iron law of economics, which is really simple 4 words, thou shalt not steal. The societies that organize themselves against the iron law of economics pay a price, and they degrade their capital formation, they degrade their productivity, and over time they spread malaise and eventually poverty and destruction. And it's no more sexy or obtuse or difficult to understand than the law of gravity, right? It doesn't matter what you think about it. It doesn't matter your opinion. It doesn't matter if you believe in the creator who created it or sustains it. If you step off a building above 7 stories tall, you're about to learn a really important life lesson. Likewise, if you're a city council or a local government or a national government and you decide that you're going to violate the laws of economics, and you're not going to respect property rights and rule of law, and you're gonna have this kleptocrat system, to the extent that you do that, you are going to pay a price in the degradation of capital, the degradation of productivity, the degradation of lifestyles and standards of living. It's just that simple, and it's just that inexorable. People listening to this should have a sense. What we'd like them to take away from this is that there are no adults driving the wheel. The people who, by and large, are running the economic systems are doing it for their own purposes. They are benefiting either economically or socially, and they don't understand reality. They are like 10-year-olds. They think they're dialing up a little inflation, dialing down unemployment. They're more like 10-year-olds standing at the dials of a nuclear reactor, throwing switches. They have no idea what's going to happen next.
By now, anyone who's read Ray Dalio's new book, Principles, know that he warned policymakers in the U.S. about the 2008 crisis ahead of time, and did this with the ECB as well in 2011. But what he said in the book is that policymakers cannot predict a crisis, since their policies are always reactionary in political nature and not preemptive. So, is there any systemic risks that are now out there? It's up to us to find them and mitigate them, and not central banks to do so. They come after the fact. That's when they come in. So what are the greatest and biggest threats to paper markets right now, in your opinion, to do?
That's exactly right. You can think about every situation, every status quo has a solidified group of winners and losers. And the winners are there because they were the most powerful. They were the most connected. That's why they won, right? And that status quo is not going to just lightly give up that power and privilege and preference because, some bright-eyed, well-scrubbed, well-intended policy wonk or political figure says, hey, I think this is a bright idea. Sure. To your point, there's a reason why. It's not just that they're bureaucratic or incapable of action. It's that the entire system that's built up that caused us to be in that situation is because somebody's profiting from it. It's a business model in somebody's financial wherewithal, and they're not just going to give that up lightly, right?
Well, that's interesting. And so any systematic risks that are out there, it's up to us to find them and mitigate them, and not it's not the central bank's role because they come
They
after the
just
fact.
can't. That's exactly right. Even if they
So,
could,
Kevin, in light
even if
of
they
this,
knew what to do, they couldn't do it.
sure,
Yes, that's right.
sure. So, in light of that, what's the biggest risk right now to paper assets?
So the biggest risk right now is that you're at the end of a 40-year experiment in fiat currencies. So there's never been a time in world history where we've had bond yields go negative. You've had all these bizarre phenomena. Well, I would tell you there's also never been a time in world history where the entire globe left the gold standard or left a standard of some sort of tangible intrinsic value. It wouldn't have to necessarily be gold. Could have been silver, could be oil, could be whatever. So at the end of World War II, you go through Bretton Woods, everybody anchors their currency to the dollar, and the dollar is anchored to gold, right? So the world under Bretton Woods is on a gold standard. It's just all of it's tethered through the dollar, which is tied to gold, right? By the late 60s, the U.S. government has so aggressively hyperinflated its currency so that it could both buy votes, have both welfare society and warfare and buy votes on both sides, that the foreigners who are watching this are like, oh, okay, well, we see what you're doing, so give me my gold. All right, here's my francs. Give me, I want gold. So we went from 22,000 tons of gold at the end of World War II all the way down to 8,000 tons of gold pretty rapidly, less than 20 years. And the U.S. government understood it couldn't sustain that, so it had two options. It had an economic option or it had a political option. The economic option was to stop printing dollars, right? And to stop promising things you couldn't deliver and just tell the American people, look, it's time to grow up. We're going to live within our means, right? The reason they didn't do that, in my opinion, was not because the government was corrupt. I used to think that you could tell the high water mark of any civilization by when they devalued their currency, because that was always the beginning of the decline. I used to think that was the moment when the governments became so corrupt they could just steal from the people and get away with it. I no longer think that. The older I get, the more cynical I get. I now don't think governments lead anything. I think they run to get in front of the mob. I think that's actually now the tipping point of when a society becomes so corrupt, it wants something for nothing. And it thinks that it can steal from their neighbor by voting for governments that'll do that. That's what I think actually happened. And so in the 60s, we did that as a society. We tipped over and we devalued our currency, and then you start downhill. And so instead of arresting that spending, getting control of the budget, telling people, no, we're not going to just keep going into debt to buy your votes and give you benefits and stick the bill to your children. I mean, think what you'd think of your neighbor if they went on a spending spree with credit cards in their children and grandchildren's names. I mean, think what you'd think of those people, right? Well, that's America. So instead of doing that, arresting that behavior, they took the political option, which was to default. And they just made up some, goofy story about international monetary speculators and bad people. Today would, be some nonsense about terrorists and drug dealers and blah, blah, blah. And so they severed the tie to gold. Now, what should have happened was somewhere in the world, some central bank with a brain should have said immediately, we peg our currency to gold. Here's how much gold we got in reserves. Here's how much we put into the world. Here's the non-deflationary indicated price. And we're now pegged to gold. That country would have fairly quickly become the new reserve standard of the world. Instead, nobody did. And then the U.S. a year or two later got out of the oil crisis and the whole imbroglio with the Middle East by doing the deal with the Saudis. We'll keep you in power if you make everybody buy oil in dollars. And we basically switched from being a gold standard to a petrodollar standard. And that worked for a long time, longer than most people would think it would. But now look at the situation. So now you've got the entire world running on what is effectively monopoly money. Nobody has any idea what any of it's worth. All of them are trying to hyperinflate their own currency because now they tell you that they're trying to give their exporters a boost, right? We want to sell our goods abroad. That's about jobs for us. Well, that's just ludicrous on its face. If they actually believe that, they're morons. Because for every dollar you help your exporters is a dollar you just stole from your importers, right?
Sure, of course.
That is literally the equivalent of picking up buckets of water from the deep end of the pool, walking over and pouring it in the shallow end. I mean, it's just absolutely ridiculous activity. What it's really doing by hyperinflating the currency, what they're really doing is are able to spend money that they don't have to buy votes, to provide goods and services. And the hyperinflation steals a little bit of value from everybody that's holding the currency, every day. And it lets them buy political favors from the people who are the first ones to get the new monopoly money. Those people become very powerful, very connected. They like that money. They get accustomed to it. They get political power from it, and the cycle just continues. I mean, there's a reason why the 7 highest per capita income counties in the United States are grouped around Washington, D.C. Higher per capita income than Silicon Valley.
Now,
think about that.
So what is the biggest risk right now with paper assets? If you're holding stocks and bonds and anything that is paper, what's the risk?
So the great risk. The systemic risk is that the U.S. dollar will fail, and people will no longer accept it as the world's reserve currency. And when that happens, and it always happens, this is just the mean average lifespan of fiat currency is about 14 years. This one's lasted 40 something. Will it happen tomorrow? Probably not. Does it have another 40 years? Yeah, absolutely not. Right? Probably doesn't have 4 more years. And it's just simply there comes a tipping point when the rest of the world looks at what you're doing, and we're going into debt, what, $4, $5, $6 trillion a year, right? We've already got $200 trillion in unfunded liabilities. We admit to at least $20 trillion in debt right now that we owe the world. At some point, the rest of the world will get their affairs in order and be ready to go through this cataclysmic process, or it'll be less orderly than that. You could have a trigger event. You could have a cascading bank failures. You could have some natural disaster. You could have a war. There's any number of things that could be the snowflake that triggers the snowpack. But I can tell you that after 45 years of the world's flooding markets with capital, with fiat currency, which is just monopoly money. Just think of it as monopoly money. It functions because everybody takes each other's money. But there's a time when that all locks up, it seizes up, and it no longer works. And the way you get through out the other end of that, no government will trust anybody else. They will all go back to a gold standard. Not because they like it, not because they've read Ron Paul, not because they've read Jim Rickards, not because they understand, but because it's the only option. It's the only thing that can't be willed into existence. It's the only asset that has no counterparty risk. I mean, there's a reason why gold is money and nothing else for 5,000, 6,000 years. It's not an accident. So what'll happen is there are 3 levels of wealth, and this is really important for your listeners to understand. There are 3 levels of wealth. There's primary, secondary, and tertiary. Primary and secondary wealth do not go away. When this reset happens, primary wealth is what God creates. You can think of it as fish in the sea, cattle on 1,000 hills, coal in the ground, oil in the ground. Right? That's stuff God put there. The secondary levels of wealth are what you do with those primary levels of wealth, how you mix your labor and capital with something. So we turn fish into feedstocks, we turn cattle into beef, we turn oil and coal into power generation, right? Sure. Those things are all still there the next day after this crisis, or the week after, or the month after. They don't go away. The factories are still there. The income producing real estate's still there. The small owned businesses are all still there. What gets wiped away are the tertiary level assets. These are the paper assets that always emerge anytime you have a civilization with sufficient surplus energy that they can advance into this order of complexity. These emerge, and they're not bad. They're not inherently evil or something. They serve a purpose. I think even the Babylonians had futures contracts, right, for a while. When this reset happens, though, everything that is priced in dollars or fiat currency gets devalued and wiped out because the debt has to be just liquidated. Nobody's going to ever pay that debt. Everybody knows nobody ever is going to see that debt paid.
Just to clarify this, Kevin, because this is interesting. If I own 40 shares of Microsoft, that gets wiped out, in your opinion? Or
Microsoft, viable companies may well survive. In fact, oftentimes in the hyperinflation that follows these things, markets just shoot, they skyrocket, which is why all of our stock markets are doing so well. I mean, there's a reason that, you probably may not realize, but the highest performing stock market in the world for years was Zimbabwe, right? If you hyperinflate the currency, it's got to go somewhere, and share prices just go crazy, right? Now, when you sell your shares, you can't buy a week's groceries. So, I mean, because the currencies have all been wiped out. So will it go away? No, but will it hold its value? Will it hold its purchasing power? Yeah, maybe not. But it's not just share stocks. It's pension funds. It's 401ks. It's cash instruments. It's money market instruments. It's your T-bills. Everything priced in gold or priced in dollars will be destroyed, revalued. Let me give you an example. It'll almost certainly happen in the emerging markets, the crisis, whatever the trigger is. They typically start in the emerging markets. So think, 1929. We kick off the worldwide Great Depression. We, the United States, we're coming out from under the UK's dominance. Before that, the UK kicked that off. The South Sea bubble, as the UK pound sterling was rising as a rival against Holland, right? Before that, 100 years prior, Holland is emerging from, I think Portugal was probably the world leader, maybe Spain. And Holland has their tulip bulb debacle, right? So something will happen like that, probably in China. It'll roil across Europe as the meltdown, the seizure starts. We'll wake up and there'll already be a full-blown crisis to it. And they'll close the banks, try to figure out if they can put a Band-Aid on this. It won't work. Markets will completely collapse. And you'll see your neighbors go into ATM machines, get their $100 a day, all right, while they're trying to get their hands around this. And very quickly, what they'll do is they will deflate away all the debt. They'll just wipe it out. And they will announce there's a new dollar. Now they'll give some propaganda nonsense about, well, there's bad people with dollars around the world. They're drug dealers and they're terrorists, and we're gonna get control of this because those bad people have dollars. So we're gonna come out with a new dollar, and you're gonna turn in your old dollars for these new dollars at 10-1. And the new dollar, so that everybody's comfortable with what we're doing, that new dollar will be pegged to gold at $1,000 an ounce. And the press will cheer, and the people who can't do math will go, yay, not realizing that pegging the new dollar at $1,000 an ounce just meant you've actually just pegged the real dollar, the original dollar, at $10,000 an ounce, which is what Jim Rickards thinks they're going to do. I think it'll actually be much higher than that. And when you went to bed the night before, your dollar had $1's purchasing power, and the next day after they announced this, your dollar has the purchasing power of a dime. And that's how they're going to get out of this. It's how they always get out of it. They hyperinflate the currency so that they can honor the debt, but what they pay you wouldn't buy lunch. This is how they always get out of it. So the way you protect yourself from that is, to the extent possible, you get away from tertiary assets. You don't want to have a lot of exposure to the things that can be destroyed in that reset. So you want to own Exeter's inverted pyramid is the best visual graphic I would tell you to look at. Exeter was a Reserve Bank governor in the late 60s who saw this coming, sold all of his tertiary assets and bought nothing but gold. And people thought he was insane. Gold was at $35 an ounce, had been forever. What are you thinking? Well, less than 12 years later, it hit $850 an ounce. He looked pretty damn smart, right? So I would tell you, your listeners, pull John Exeter's inverted pyramid and just look at it, and it'll show you what I've just described you in primary, secondary, and tertiary assets. And so you want to work your way down that pyramid, get away from these tertiary assets, because, like I said, the next day the factories are still there, the companies are still there, the farms are still there, the income-producing real estate's still there, your gold and silver is still there. But what's wiped away are all the more complex. The derivatives are gone. All the trading swaps, all the 401ks, all of that's just wiped out. Bonds, yeah, everything that's paper derivatives against the real economy are destroyed.
Interesting.
In that reset.
How can individual investors invest in real estate? What are some step-by-step plans that you can offer, or in farmland or land in general?
Oh, wow, so I can just tell you what I like, and then folks can do what they think best. But
Sure.
for unaccredited investors, for people that the SEC would judge aren't sophisticated, their language, not mine, but meaning they have less than $1 million in net worth, or they're not being paid $250,000 a year for the last couple of years. For those folks, the average folks, I would start looking around for income producing property, in your town. Start looking for duplexes, quads, 16, 30 unit apartment complexes. If you need to grab a bunch of friends to help defray the cost of the down payment, do that. Um, but that would help you shelter some income. I would get some of your money into precious metals. Jim would say less than 10 to 20%. I do quite a bit more, but I have a darker view of this than he does. Um, I would make sure you have some of your assets in gold and silver. I'd have some of your assets, maybe 2 or 3 months worth of living expenses, in cash outside the banking system. Um, because when these things seize up, I mean, look at Puerto Rico right now. They can't buy or sell because the electric grid's down. Nobody credit cards work, no bank transfers work, no ATM machines work. And it doesn't take, and as Puerto Rico shows, it doesn't take a terrorist attack or a North Korean EMP to set a complex, brittle society back. One bad storm did that, right? So you just kind of owe it to yourself to be a little more resilient than your complex society normally thinks of, for you and your family. Again, remember, there's no adults behind the wheel. It's just you. But if you're accredited, or if you've got a little bit more assets, there are two things I would recommend you look at. I would look at Farmland LP, really smart group of folks. They take farmland and they convert it to organic, and they use permaculture rotational methods. So they don't do monocrops, they don't use any kind of chemicals, and they are very, very smart about sustainable agriculture. They'll take land that's producing at about $600 per year, and they'll turn that to $3,000 per acre per year in about 3 years by converting it to organic and converting it to permaculture. So
Is this
I
a
would
private
recommend
company
Farmland
or
LP.
a public company?
It's an investment group. Uh, I don't know. That's a good question.
Okay.
I, I, it's an LP, so it may be traded, but I just don't know. The second thing I would recommend to look at is Cardone Equity. Grant Cardone's a brilliant entrepreneur out of Miami. They buy very large apartment complexes. And again, this you'd have to be an accredited investor for. But if you've got accredited investors on here and they're not going to set aside some money to invest in Mariglaim, I recommend they reach out to Cardone Equity and have a discussion with those guys, because they've done phenomenal work. They bought three-quarters of $1 billion in real estate in, I think, the last 22 transactions in a row. They've had 100% ROI. I mean, they really know their business.
Very
But
interesting.
again, if you're not an accredited investor, you can replicate that yourself. Grab 4 or 5 friends. That's how I did my first apartment complex. I grabbed 4 other investors, and we each pooled our money. We put down a $250,000 down payment. We bought $1 million apartment complex, and we made bank on that.
Well, basically, you created one entity which is accredited by having four people that are not accredited come together.
Yeah, it
Definitely
effectively
get it.
we and so for your listeners, everybody can do something. That's the right way to think about it. Nobody should hang up and think, these are just too complicated. I don't make enough money. I'm just minimum wage. Okay, then save 20, 30% of your income as aggressively as you can and put it in silver. Silver is a horribly malpriced precious metal. It will scream up in value when this reset happens. So start getting some asset in silver. And oh, by the way, having 1 ounce silver coins right now in Puerto Rico would be the difference between life and death. You could still buy groceries. You could buy water. People will understand the value of that,
Sure.
right?
Kevin, you have a very negative approach, or should I say, a very doomsday approach on the world, and certainly on the ability of the markets to resolve the debt and entitlement situations without a major system crash. Do you believe that the system crash is the only route possible from now on?
So that's a great question. And the answer, of course, is that hypothetically, yes, it could be. intelligent people could, if they understood how the world worked, could look at that snowpack and say, it's going to hurt. People are going to be really upset, but we need to detonate that dynamite and take that snowpack down before it kills people, right? That is clearly, logically possible, theoretically possible. I would be hard pressed to think of a time historically that was ever done. And the reason for that is not because the people in charge are morons or are careless or thoughtless or callous about it, but it's back to that original conversation we had. The same reason they couldn't take proactive steps to stop what was coming in 2007 and 2008 is the same reason they can't take those steps now. The status quo as it is right now emerged as a business model with the most powerful people on top who are getting paid very well by this system. There's neither the economic interest or power to force that preemptive change. And anybody who tried would be vilified in history as being the person who caused it, right? There'll be no judgment in history that says, well, that was inevitable and it was going to be 1,000,000 times worse if they let it keep going. Good on that guy for biting the bullet and making us go through that pain. Right? That's never going to happen, sure. Right? And so it's in the rational self-interest of everybody involved to just hunker down, skim as much value out of the system as they can before it implodes, and pray they're not the one holding the bag when it blows up so history doesn't hang this on their neck. That's the situation we're in. And my only point to your listeners is it would be foolhardy to expect for any other outcome to occur. They lack the wisdom to understand the problem. They lack, and I'm a big Trump fan. I love his people. I love his cabinet picks. But the fact that he doesn't understand what's coming, to my mind, is self-evident in the fact that he's taking credit for the stock market boom, which I think is a horrible mistake. That stock market's booming for the same reason the Zimbabwean stock market boomed. Not because of healthy corporate earnings, but because the central bank is juicing markets with counterfeit money. And we know how that ends. But by bragging about the stock market boom, he's now taken ownership of what's coming. And if he understood economics the way I believe we understand it, he'd have come in office talking about 325% debt to GDP, $20 trillion in debt, $200 trillion in unfunded liabilities, and saying this is gonna blow. People hunker down. We got to get through this. But he didn't do that. I mean, he did in the campaign, but once he took office and people got excited that now you were going to have this deregulation and you were going to have a better economic environment, things took off again. But that's not sustainable. It's really fragile. It's brittle. And the proof to me that he and his advisors really don't understand what's coming is the fact that they would crow about this bounce. That just means that, unfortunately, it's going to be even more confusing when it blows because his deregulatory, very good ideas are now going to take the blame for a 40 years, experiment in socialism. But it's just the way the world works.
Kevin, how can people learn more information about Meraglim?
Sure. So your listeners will remember the story. They may not recognize the name. So in Numbers chapter 11, Moses puts together a team of crown princes to form a reconnaissance unit. And he sends these men into the promised land for a 40-day reconnaissance. And they come out the other side. It's Numbers chapter 11. They come out, 10 of whom are just panicked at what they saw. 2, Joshua and Caleb, see the opportunities, and they're all excited about it. And the proper Hebrew name for that reconnaissance team is called the Meraglim in Hebrew, or Meraglim, anglicized. And Jim and I thought that was just a perfect analogy for what we're doing for our clients. Going out, going downrange, and looking for those risks and opportunities and coming back and reporting. So if you've got accredited investors, again, not my choice. This is the SEC gets a vote in this, and they decide who should be protected from themselves. And so they've decided that these kind of things can only be invested in by accredited investors. But if you're an accredited investor, we'd love for you to go to the website, meraglim.com, MERAGLIM, just like it sounds. And click on the data room, look at the pitch deck, look at the deal docs, and if you like this idea of complex adaptive systems being the right model to think about financial markets, you like the idea of blending complexity science and human intelligence and all the rest that we've done, we'd love to have you come on board as an investor and go for this ride. It's going to be fantastic.
Kevin, thanks for being with us. It's certainly interesting to get your perspective.
Well, it was very nice meeting you. Thank you for doing this.
At Wealth Research Group, we talk about a lot about the possibility of a systemic risk and the option of a collapse for the fiat monetary banking system and what the ramifications of that will be. It's important to remember that the stock market crashes, or for that matter, any other asset class, is not the same as a system collapse. In that type of scenario, government intervention will be massive, and every country would react differently. It's extremely hard to predict if such a day will come, when it will come, and what will happen. Therefore, having some insurance assets is always a smart move. We've created a number of exclusive special reports on these topics exactly, and I suggest you hit our website under the button Special Reports and read our newest ones. In the bottom line, the biggest difference with today's world compared to the past is that we are part of a global economy, and therefore a system problem affects everyone, and that is the uniqueness of the situation today. Thank you for joining us. Stay engaged, stay very alert to the risks, and make sure that you're very much politically and asset-wise diversified.